Joining me now, full house on set. There's no telling what's going to be said here. John Carney, Breitbart Finance and Economics editor, co-author of the daily Breitbart Business Digest. Edward Lawrence is here, Fox Business White House correspondent extraordinaire. And if that weren't enough, Taylor Riggs, co-host of The Big Money Show, right here on fabulous Fox Business. We got a lot of luminaries here. All right, I'm going to start with you. All right, I'm just giving this half of one share. Half of one share. I want big picture stuff. I want depreciation. I want factories. I want a 15% corporate tax rate. There's minuscule private jobs, to use your phrase, government adjacent jobs, where half of the private sector job. That's not any good.
No, it's not a very good jobs report. It wasn't that bad if you go back a year and see that we actually weren't adding very many jobs for the last couple years, except in the government sector.
Right.
So Donald Trump is ending that. That's helpful. The other thing that I thought was very important that Scott Bessent said yesterday, which is we are going to free up banks to start lending to businesses again. That part of reprivatizing the economy will go a long way. That'll take a little while to get done, but when it happens, I think we will see a lot more job growth.
Taylor Riggs, I'm astonished at the stock market.
Yes.
Astonished. The reason I'm astonished is the stock market is like jousting its shadows here. I mean, we don't even know what the tariff strategy is going to be. Plus, it changes almost every other day. Nothing's been implemented yet. Stocks go crashing down, then they come back, then they go crashing down. I don't understand any of it. I mean, you've got to help me out here. I mean, I think it's a lot of white noise, but what do you think?
Well, you just wait until you hear that the NASDAQ just opened up 5 days a week, 24-hour trading for the crazy lunatics like us who want to trade at 3 in the morning. That's another story. Look, the markets, as you know, very volatile and short-term looking. And I think the markets had such the big run-up since the election, all on the pro-growth policies. And Larry, to your point, we've been focused. You have to look at the Trump agenda as a whole.
Yeah.
We've been focused on the tariff side. We haven't been hearing enough about the tax cut side until today in your wonderful riff. So the markets are focused on tariff.
This is not the first time I've mentioned that.
I understand. I'm just giving you a hard time.
Just saying.
But the markets aren't hearing it, even though you've been saying
So Jay Powell's speech today said he's going to look at the entire panoply of Trumpian policies.
You just need the markets to agree with that, because right now all they hear is tariffs, inflation. They're ignoring that it's a one-time price adjustment. They're ignoring that tariffs might be, wait for it, disinflationary or deflationary if there is slower growth, which leads to lower prices. Because if it's supply and demand and there's less demand, then the price and the supply comes down.
You know, foreign tariffs could come down. I mean,
Bingo.
The point of reciprocity, yes, they could go up, but if India reduces its outrageous tariff rates, it could come down.
Yeah.
I mean, Trump, in his heart of hearts on reciprocity, is basically a free trader. Edward Lawrence, I got to give Jay Powell some credit. The speech he gave today to Chicago's business school, here in New York, I believe, anyway, University of Chicago Business School. But basically, he's saying, don't panic. We're not going to panic. We're going to look at the whole set of Trump policies and see where it leads. I mean, I think he's got to get some credit for that. It's very even-handed, very calm, and by the way, very accurate.
Yeah, we're just over 1 month into a Trump administration, so they have to see how this is going to play out. I mean, you look at it like the economy's maybe a baby, let's say. So the baby's trying to learn how to walk now without the government assistance. And so that baby's going to be a little wobbly as it goes up and gets then footing, and then all of a sudden the baby starts running. So we're in that wobbly phase as the president's trying to wean off the government assistance that the Biden administration has sort of created. I mean, you look at the jobs cover in government. I went back and I looked under the 4 years of the Trump administration, the first Trump administration, government lost 626,000 jobs. That's state, local, and federal. Over the 4 years of the Biden administration, government gained 1.8 million jobs. That's taxpayer money taken out of the economy to do other things.
You know, it's important. That's the reprivatization that Scott Bessent keeps talking about. It's a very important concept. Sounds like the president mentioned it in the Oval Office today also. Now, you had federal jobs fell 10,000. State and local jobs went up 20,000. So it's kind of a push, but I think there's more coming. But the other thing, though, I want to mention, so correct me if I'm wrong, there's about 160 million civilian workforce in this country. Okay, 160 million. What we're learning from the DOGE effort of downsizing personnel in Washington, D.C. in the swamp, 30, 40,000, 45,000. So I'm seeing left-wing economists who are crying and clutching their pearls and crying their eyes because we're going to lose 40,000 jobs, and they're going to say it's going to decimate the economy, throw us into a deep recession, even though 40,000 as a percentage of 160 million is
zero.
What? Nothing? I mean, you can't even find it on your calculator? Really?
It's a rounding error.
It's a rounding error. Thank you.
No, you're absolutely right. There's not going to be some sort of depressive economic effect. Actually, I think longer term, it will boot. Look, we had great growth when Donald Trump was president, and we were losing jobs month after month in the federal government. We can cut the federal government. It will make the economy more efficient because people will be providing goods and services that people are buying rather than just spending taxpayer money.
Yeah, I mean, and so, Taylor, you got to talk to your stock market friends out there.
I know.
This tariff hysteria has got to stop.
It's
just got to stop.
Well, I love that you focused on corporate profits, because that at the end of the day is what is going to drive the long-term narrative in the market. This week was bad. This is one of the worst weeks in the equity market that we've had all year. Okay, I hear you. But I also love that you're getting comments from the administration, from people like Scott Bessent, who say maybe we're not as focused this in Trump 2.0 on the equity market as we were in 1.0. Maybe, wait for it, we're looking at my favorite, the 10-year yield, right, as an indicator of how to bring prices down for consumers.
Why is the 10-year yield so important?
Well, I love it because it's the benchmark, and it does drive what you pay on your autos, a little bit of what you pay on your credit card, a little bit of what you pay on your mortgages. So if you have a 10-year yield that goes from a 484, you're shaking your head at me.
Nice
no?
try.
Down to a 425.
The reason.
Does that not bring down the cost of everything else?
Edward, help her out.
What?
Help her out.
What?
The reason it's important is because Scott Bessent has made it the administration's benchmark, key barometer of success or failure. They have brought the 10-year yield into the political sector. All right. Soon, Fox News at night is going to be talking about the 10-year bond. I wait for it. Jesse Waters, and it's going to be fabulous stuff. We'll all be overemployed. But that's what's happened. Scott has put it in, as he said many times, including yesterday at the New York Economics Club. They're not worried about short-term rates.
Right.
They're the buy, hold, the success, fail is about the 10-year, which has come down. Now, why has it come down? That's another point.
And that's a good question. But I want to talk about, actually, I want to mention the stock market once. I think the stock market will come around. The reaction now is the little uncertainty. The stock markets, they hate the uncertainty. And they maybe don't realize that, hey, President Trump has a grand plan with all of this. And look what happened with these tariffs, 25% tariffs on Canada and on Mexico. Oh, my gosh, all the goods are going to go up one price. And then he said, look, OK, I understand. These are some of the problems here. These are some of the industries that are affected. Let's pull out autos. Let's make sure it fits under the USMCA. So then he's gone back and fixed that. So April 2nd, I think, is going to be a very big day for tariffs. And you're going to see a lot of countries around the world bring their tariffs in line with the United States. We're already hearing the European Union wants to bring auto tariffs down to 2.5%.
You hear, that is a big point. What he just... Now, he's a reporter, so it's not like one of us. He's actually a reporter. But I'm just saying that's an important point. Yeah. It's the biggest what if out there, okay? What if the reciprocity approach to trade brings tariffs down?
Larry, I pointed this out the other day, and I brought it up with Scott Bessent when he was here in New York. I said, you guys need to put up a tariff dashboard so that we can keep track of everybody who's tariffing us, and then we can watch it work. When they start to bring down the tariffs, you can put a little green check mark and say, you know, we're winning. So they should have a dashboard so all American citizens can see where our goods are being tariffed and the progress reciprocal tariffs will make to bring those down. Scott loved the idea. I think they're going to do it.
I think they should do it, and I think it may be more successful. And I'm surprised that more people on the street and in the markets, but I think more of the Wall Street trader types haven't thought about the possibilities here. Now, in the first tranche, okay, he may threaten a tariff hike, But the fact that he threatens the tariff hike means that the tariff hike actually never happens.
Right.
And that's really it's tricky, but it's part of his calculus. The guy's a great negotiator.
Wall Street is eager to know that tariffs are a tool. They like free trade if tariff barriers can come down. I think they're more open to the idea of reciprocity than they are a blanket 10, 20, 25% tariff across the board. Look, this was fragile coming into this. You talked about the soft data, and we got hard data today from the employment report. We should expect volatility. Stocks go up, stocks go down. Let's focus on the long run. Let's see, again, to Edward's point, where we are a few months from now when the dust settles. Let's see how corporations respond. Let's see how hiring responds. Let's see how we've heard, who did we hear from today? Costco, right? Things are okay. They're not great, but they're okay. That's the environment we came into. Let's see how we can respond 2-3 months from now.
And Edward, it's interesting. So already in a month, what is it? In 5 weeks, 1.7 trillion of new foreign investment.
Right.
1.7 trillion of new foreign investment is coming into the United States. That's an enormous number, and it's not going to stop there.
And no government handouts for that.
Right.
No government handouts.
Exactly.
And that's the point.
This is private.
The president is
right?
creating in a business environment, he says, that brings people in, and that is the end result at the end of the day, is they are bringing in companies who are saying, okay, I can build my products here, it's going to be more expensive, or I can build it here in the U.S. and get a lower corporate tax rate. I think that is going to be a key to growth.
Right.
And you could look at Ireland, what Ireland did, 10 years ago when they went to the low tax rate. Now they're trying to figure out how to spend their surplus, their budget surplus.
And the Fed is going to keep its powder dry. I like that.
That's right.
What Powell said today, basically.
Powell's great in saying, look, they want him to panic in some ways. You can tell that when he gets asked questions, they're like, but what about tariffs? Oh, no. And he said, look, we don't know what the effect will be. He didn't cite this, but I know he's read it. The Atlanta Fed just put out a paper showing very little price effects from, even if we got a 10% tariff around the whole world, they showed very little price effects. And as you said, just a one-time price effect, so it's not inflationary. He said we can look through that. And that's what they're going to do.
But we saw that in the first Trump administration. There's proof. There's a record of it.
What happened.
He tariffed, and there was no.
I got to get out.
Stocks are one of the only things we don't buy when they go on sale.
Liz is screaming at me. I don't know. I wanted Ducey to buy some Bitcoin, but I guess he's not playing. Thanks to everybody. John Carney, Edward Lawrence, Taylor Riggs. You're all terrific stuff. You can catch Taylor along with her co-hosts, Brian Brenberg, Jackie DeAngelis, Dagan McDowell, on The Big Money Show weekdays, 12 to 2 p.m. Eastern, right here on Fabulous Fox Business. And it's good to see you on